A wave of layoffs is going on with the US companies. In the first few months of 2022, a wave of layoffs swept across American businesses. The reason broadly is twofold. Business growth is slowing while labor costs are increasing. The combination is causing American companies across a variety of industries to slash headcounts. The fact is, the management looks at the headcount numbers critically when they want to cut costs and protect profit margins as they are accountable to investors. Hello and welcome to VAR India News Hour. The ongoing Russia-Ukraine war has contributed to the layoffs in the job market as it has made the market more volatile. This is clearly visible from the stock market volatility. A potential economic recession is a big red flag, with inflation soaring in most parts of the world, leading to a crisis in the job market as well. The International Monetary Fund has cited forecasts for global GDP growth in both 2022 and 2023 as gloomy. These measures involved increasing the interest rates. We have seen how the US multinational companies including tech giants Amazon, Meta, Intel, Twitter, Citi, Morgan Stanley and Adobe announced massive layoffs. These developments are bound to have an impact on India's export prospects, especially in the information technology sector. The Indian IT services firms are among the largest employers in the organized sector, and any global economic trend is bound to have an impact on their growth projections. The attrition rates, or the number of employees per 100 quitting on their own, of the top two firms, TCS and Infosys, show that these rates are still high, which means that there is enough business for the sector for competitors to draw away employees with promise of higher salaries. For instance, all top companies except Wipro saw a rise in revenue and net profit. The news of layoffs in the Indian startup front is predominantly in EdTech, or the educational technology front. During the pandemic, there was a surge in demand as people were locked down and were spending a lot of time on the internet. The overall consumption saw an upsurge, following which the companies went to increase their output to meet the market requirements. As the demand is coming back to pre-COVID levels and seeing the debt bubble almost about to burst and fearing recession, managements during a recession look critically at the headcount numbers to cut costs and protect profit margins as they are accountable to investors. Experts say this is the best time to invest in India as it is fast becoming the investment destination of the world. This is the first time India has achieved its ambitious target of crossing the $400 billion mark in merchandise exports, and this also shows that India has started to emerge as a trusted partner as global firms are looking to diversify their supply chains and reduce their dependence on China. There is a tremendous focus on the country on sunrise sectors such as 5G, artificial intelligence, drones, semiconductors, blockchain, green energy and space economy. Let's look into today's headlines in VAR India. Russian hackers accused of targeting US military weapons and hardware supplier. A state-sponsored Russian-backed hacking group has been linked to attack infrastructure that tricks the Microsoft login page of Global Ordnance, a US-based military weapons and hardware supplier. Cybersecurity firm Recorded Future said it discovered 38 domains, 9 of which contained references to companies including UMO Poland, the Commission for International Justice and Accountability, and the Russian Ministry of Internal Affairs. ONGC appoints former BPCL head as its chairman and MD. Former chairman of oil refining and marketing company Bharat Petroleum Corporation Limited, Arun Kumar Singh, was appointed as the chairman and managing director of Oil and Natural Gas Corporation for 3 years. Arun Kumar Singh was director marketing of BPCL from 2018 to 2021, after which he was elevated as chairman and managing director of the company. He has headed business units and entities in BPCL such as retail, LPG, pipelines and supply chain optimization. Vedantu reportedly shows pink slip to its 385 employees. Tiger Global-backed EdTech unicorn Vedantu has reportedly laid off another 385 employees in a cost-cutting initiative prioritizing profitability over growth. With this, the company has now fired more than 1,000 employees this year. While employees from across various departments have been laid off, learning, content, HR and sales enablement teams are the most affected teams. Government directs Google to not display online betting ads. The Indian government has asked Google not to display replacement ads on overseas betting companies. In a letter sent to Alphabet Inc.'s Google last week, the Ministry of Information and Broadcast asked the company to immediately drop direct or surrogate advertising from betting platforms like Fairplay, Parimatch, Betway in search results and YouTube. RBI to launch new feature on UPI for e-commerce. The Reserve Bank of India has decided to add a feature called single block and multiple debits in the UPI platform to help in payments where delivery of goods and services happens later, like e-commerce purchases, hotel bookings, or investments in securities. Through this feature, customers will have more trust while carrying out such transactions. RBI Governor Shaktikant Das said that this kind of facility will build higher degree of trust in transactions as merchants will be assured of timely payments while the funds remain in the customer's account till actual delivery of goods or services. That's all for now. Please like, share, comment and subscribe to VAR India News Magazine. You can download the VAR India app from Google Play Store and Apple App Store for the latest news and updates. Stay tuned. Thank you.